Hello everyone, Kim here. Today's October 6th, 2017, Friday. Hope you had a good week trading thus far. Actually, as I record this video, I'm actually recording this video kind of a late morning, so market should be open another 4 hours as I record this video. Again, my name is Kim with the Traders Club. Welcome to the market update. I do have an announcement for you guys who follow my videos and articles and things like that. Well, I am traveling starting next week for a few weeks, so there will be no market update video next week, which is the weekend of the 13th. Oh, Friday the 13th next week, huh? So there will be no market update video on the 13th next Friday, and then the week after, which is the 20th. So 13th Friday, 20th Friday, there will be no market update. So we'll rest on the market update video for 2 weeks. But I mean, if I see any kind of development or anything like that, I'll tweet about it or, write an article. But the market update video itself, we'll take a break for 2 weeks, and we'll resume back on the 27th, Friday, and we'll go from there. Hope you had a good week. This week, market has doing very, very well here. It has broken out of, Spider has broken out of this rising channel finally, and we've been talking about that. And obviously IWM broke out a week ago, and Q's still kind of in that potentially rising wedge pattern. Banks had a good move this week as well. I have added 10 EMA now that the market is starting to get a little bit extended here. So 10 EMA has been added. So 10 EMA at close, 20 EMA at close, 50 EMA at low, 100 SMA at high. If you've been following my moving averages to understand at least the sentiment or the trend behavior or trend of the market. So as long as we stay above 10 EMA, I would have to say the micro term benefit of the Dow goes to the buyers as long as we stay above it. As long as we stay above 20 EMA, minor term benefit of the Dow goes to the buyers. As long as we stay above my 50 EMA, benefit 50 and 100 in that vicinity, benefit of the Dow goes to the buyers in the intermediate term. As long as obviously we stay above 200 SMA, benefit of the Dow goes to the buyers in the primary term, right? So I think a lot of people are kind of crying about how, like Spider hasn't, retested 200 SMA for so long. And I've been talking about how we may not see Spider ever test 200 SMA this year. And this is, I know we just got a few more months to go, but I've been talking about it for, I think since early this year that we may never test 200 SMA. And I think we talked about, do you guys remember, like, I don't know if you guys remember, but we talked about how I think earlier this year, even like around March or so, we may never see more than 5% correction. Let's see if I was right about that. 3.66, 1.68. Those are just very measly pullback. 2%. Yeah, so we have not yet seen more than 5% pullback. I mean, we've seen the worst, I think, in March, we saw about 3.6% pullback. We have not yet seen 5% pullback. That's something that I've been talking about since the early this year. I mean, even this measly thing, when everybody was just freaking out in late December, 2% pullback. So we've seen 2%, 3%, 3%, 2%. We have not yet seen Spider retest 200 SMA yet, and I don't think we will see that this year. Perhaps sometime next year we'll talk about that when we see certain evidence of that possibly happening. But for now, market looks great. Market is in an uptrend. It's healthy. The trend is valid. Russell broke out. Banks are doing well. Q's obviously already been doing well. Dow is doing good. Transport doing well. Well, the Dow and the Spider, S&P, and the Nasdaq have not yet retested 200 SMA, right? We do have, however, the Transport, Russell 2000, and the banks have already retested 200 SMA and bounced. And you guys know that I always analyze banks because I always treat XLF, the banks, as one of the indices because I want to see the banks there. I want to see the banks to be healthy. We don't, I mean, 2008, it was a telltale signal when the bank stock starts to see deterioration at a fast rate. Everything else kind of followed. When we did have that financial market crisis back in 2008, that's what kind of led the crash. And so I always I always want to make sure that the banks is in the big picture. I'm not talking about in just in a minor term or an intermediate term. I'm talking like a big picture, overall perspective that I want to make sure that banks as well. That's why I always analyze banks with you guys on every market update video. So let's get to it here. Today we're going to be talking about Spider, IWM, Qs, XLF, Apple, Tesla, and GLD, and we'll call it a day. Spider had a big move here. We broke out of this move. I mean, like looking at the daily chart, yes, we are extended. But when I look at my weekly chart with my oscillators and everything else, it's not overbought on the weekly. So that means possibly you could see a minor term pullback to some of these moving averages before getting back up. But I mean, we've been talking about this level. This is a level that you want to pay attention to. I don't want you to be too precise with this line because we could go slightly below it or a little bit like that and then get back up. But what I want you to really pay attention is the in the vicinity of that rising channel resistance there. And then obviously we have a 10 and 20. So really though, as long as we stay above 10 and 20, minor term trend is bullish, right? So we have a little bit of bearish Harami forming as of now. Potentially a pullback to retest. We got pretty close to my target at 255. And then we're pulling back, we gapped down a little bit, but not so much here. After, 1, 2, 3, 4, 5, 6, 7 days of run, that's really not a whole lot. Maybe we do another bull pennant pattern. We've been doing that for a while. That has been the kind of a trend or fashion that it seems to happen here in the last couple months. Maybe we do another pennant before going back up, or maybe we do pennant and then kind of fake everybody out, possibly pull back. But trying to forecast that is probably very difficult thing to do because obviously that bull pennant here that failed, and so a lot of times when they subpenned this one, they thought it's gonna fail again. Well, and then it got up. So it's really 50-50, 45-60-55 type of deal here if we do have some kind of pennant. But I'm really getting ahead of myself because we could still just grind a little bit and get back up. So let's see if we do see a pullback. I want to see 10 EMA hold next week, and then if we do lose 10 EMA, if we do lose rising channel resistance, it's not the end of the world. It's not a huge bull trap because as long as we stay above this vicinity, I think we can still make this to continue higher. The worst case scenario, maybe come back to retest 50 MA, but I don't know if we're gonna see that happening in October. I think I know everybody's talking about, everybody's been talking about September is gonna be the worst month, and then now they say it's October is the worst month, and maybe seasonality wise, maybe it has been a record of that. I don't put too much weight on it, but overall, I do kind of look at seasonality, but I don't just, can you imagine? Because, October tends to be, let's just say, September tends to be most volatile month. People have been saying this since August, September. Let's just say August, September, October most volatile month, and so people say, well, I'm going to close out all of my stocks, in August and September, and then I'm going to come back in November. Well, they're missing out on this move. If you know what I'm saying, they're missing out on this move. Thought that there was a steeper pull, and maybe those people thought that there might be a 200 SMA retest or something like in October, in August. So it's always best to kind of go with where the market is giving us, as far as a trend is concerned. As long as it is giving us kind of an uptrend sentiment, then we always have to give benefit of the doubt that it's gonna continue move higher. As long as we continue to cultivate, especially we've been in this kind of a rising channel, which we've been talking about for some time, and this been acting as strong support here. So it was kind of a likely place. It kind of actually faked everybody out. Remember we talked about the deception. You see that support that broke, faked everybody out. Everybody was going crazy, freaking out. Bears were chanting, crashes on our way, and then just got right back up. pretty much, and then now we are back here. So looks good here. Let's see how we deal with this rising, some of these 10 and 20 MAs and this rising channel resistance, you know, going forward here. Let's go to IWM. IWM is doing very, very well here. Broke out last week or 2 weeks ago, this rising channel. Again, another scenario where it just faked everybody out, got back up, and we're really not giving anything back, even though this thing pretty much went straight up. A little bit of tight pennant consolidation type of pattern. I've been talking about how if this thing pulls back to 145, I will be buying this dip. I've been buying the dip pretty much all year long, accumulating my long positions, and I'm holding everything as of today, and I'm waiting until it gets to about 155, or we come down to 10 EMA and then we find some kind of bounce there. But regardless, I think 155, 160 is doable. And if you've been following my video, I'm not just saying that today. It's easier to say that now, but I've been saying it when it looks like we may never get to 155 this year, right? And I've been saying it all throughout that there's still a chance we can get to 155, 160. So I still think that that's possibility here. 155 for sure this year, possibly 160s. We'll see how that plays out. So looking good here. You know, I look at my daily chart, obviously it's overbought, but when I look at my weekly, guys, it's not overbought yet. There's more room to move. Let's go NASDAQ. NASDAQ, we've been talking about this rising wedge pattern. We're just right there now. So this is going to get a little bit hectic here, like maybe something like this. Potentially, you know, it could give you a little bit of head fake and then gap back down. But a lot of people say that this is a rising wedge, is a bearish formation. We've been talking about how it could break on either direction. I've also seen this thing where it breaks to the upside. Anywhere it breaks, it's probably going to see some leg to it. Another scenario might be that it could break upside and then fake everybody out and come back down. It could break to the downside, fake everybody out, come back up. So trying to like pinpoint the perfect breakout point is probably going to be very, very difficult. If we do though, if it does break down to the downside though, and possibly if you're looking for something like that, I would pay attention to 100 SMA. Let's say if this thing comes down, break below it, the 100 SMA, you see the 100 SMA right there, and then go up, retest that 100, prior resistance, prior support as a new resistance, and then fall over. I think then we probably gonna come down, back down to this level, which is coinciding with the 200 SMA. Remember I talked about, you know, Q's possibly the next candidate for retesting 200 SMA. So if that happens, then that's what we're gonna do. If not, then perhaps this thing is ready for another leg higher. I mean, it's not really surprising that it could go higher because, I mean, you know, if we just kind of observe some trends here, and you thought this was a big move, you know, we kind of even look like a head and shoulder formation here. Looks like that. You can see after this kind of move, but it actually continued higher. But, you know, I have to also say that it did retest 200 SMA here. You see that? It did, even though the head and shoulder formation did not pan out right there, we actually did retest that 200 before making another leg higher, retest at 200 again. So just because this thing had this kind of move doesn't mean that it has come back down. It could just possibly fizzle, maybe possibly retest 200 SMA before going higher. If we do see retest of 200 SMA, I think that's a vicinity to buy the dip there. It will be a good opportunity to buy the dip. XLF, obviously we talked about XLF already did retest 200 SMA, and that was precisely where it found support there. We got a little bit bullish Rami on that day, gapped up, continuation, boom. Ever since then, it's been going pretty much parabolic. I think that's why, you know, I love when the market shake and bake, because that bigger move is coming. So every time when there is a pullback happening within a primary to intermediate term uptrend, that's an opportunity, not a level start to freak out. If it's in a downtrend, or if it's in a consolidation pattern, or if it's in like a topping pattern, and then that thing gaps down or sees a sharp pullback, then you're gonna be cautious that maybe overall trend is shifting back to bearish trend. But we're in an overall primary term uptrend, as you can see here. As you can see, and then if he pulls back, then that's always is a good level to you know, buy the dip and as we're an uptrend in an uptrend, right? And or as it pulls back in an uptrend, right? Let's go to also XLF. As I look at daily chart, it is overbought on the daily, but on the weekly there's a room to move, so possibly pulls back, minor term, maybe retest 10 and 20 before getting back up. But banks are looking really good, especially if you check your monthly chart, do a little bit of study on that, banks is looking very strong here. Let's go to Apple. I still want to talk about Apple weekly. You can see that we're still bound by this bearish divergence, guys. So there's still some kind of pressure that is kind of getting built here. So I think that's why Apple has not been able to participate recent rally here. So we're just kind of right below the 20. We're sandwiched between some of these moving averages here. Some of the resistance are kind of in that vicinity. If we cannot gap back up, we do have a little bit of gap here, just tiny gap. But if we cannot gap back up 159, 160-ish, and if this thing starts to fail, then things can get more hectic. The more downside is going to get because of that weekly bearish divergence we talked about. There's a pressure from up top. You see that the MACD already made a lower low with that bearish divergence there. So there's a pressure there, and so we're just kind of for that to be nullified, it needs to start to kind of march higher, start to build some kind of higher lows and higher highs, maybe consolidate more, something like that, and then nullify that weekly bearish divergence pattern and then break out. So that bearish divergence is there, so it's going to make hectic. Doesn't mean it cannot go higher, it just means that it could go higher. But even when it does go higher, you're gonna see that it feels heavy. We're probably not gonna see this kind of move until somehow, some way, that bearish divergence either get nullified or that gets played out. If that gets played out, if bearish divergence actually gets played out, that means this thing probably gonna come all the way back down, possibly pounds, and if he pulls back, maybe create head and shoulder. But again, I'm getting too ahead of myself. But all I'm saying is we have pressure, selling pressure, and they are unloading. They are taking profits. So that's kind of what we're seeing here. Let's go Tesla. Also, Tesla, I want to iterate that we do have this bearish divergence. It's not like a strong bearish divergence like Apple, but nonetheless, it's there. So we got a little pressure. What it's saying basically is, what this technical is conveying is basically there's some profit taking there, and you can see that we have some kind of a double top pattern there. And again, that double top is not going to be confirmed until this thing breaks below that neckline. So let's see how that plays out. One last one, GLD, I'll let you guys go. We talked about in the last market update video that this is a vicinity where likely find some support. Today we are seeing a little bit of accumulation here. So let's see if that level can hold. We do have 100 and 200 rising. So let's see how that plays out. And technically though, what we're seeing is we're slowly cultivating some kind of uptrend here in the intermediate term. We got the low, we got the higher low. This is a vicinity of higher low. So if we do see a bounce, and if we do see a follow through from this, then there's a good chance this is another higher low before cultivating another higher high. Have a wonderful weekend. I won't be seeing you, or I won't be talking to you for 2 weeks. Again, for the next 2 weeks, there will be no market update. 13th of Friday, 20th Friday, there will be the no market update video. We'll come back on the 27th, the last Friday of October, and we'll resume with our market update videos. Again, have a wonderful weekend. Good luck trading next few weeks. I'll come back to you guys in about a few weeks.